And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. It's tax day. Well, not this year because they delayed tax season this year by a couple months, I believe.
Yay, no tax day.
No tax day today. Let's all cheer. Let's all celebrate. Got a full crew here today. Cody on the back end doing the production and the hosting. Noah running the show here in terms of screen share and charting. And then Emily, we got to start with the ladies. Emily, how are you doing? From Women in Trading over there at Tackle Trading. How are you doing today?
I am doing wonderful. I'm here for the smiles and the cheer and the good mood.
Smiles, cheers, good mood. That's what the team's all about, you know. So let me depress you with a couple of bits of data about the economy here, dear.
All right. Thanks for having me on. Bye-bye.
Noah, how are you doing, my friend?
You caught me right. I'm awesome, apparently, but not prepared to talk at the moment.
Every time somebody coughs, we're like, all right, is that COVID? I mean, you
no,
okay?
I have a hard time swallowing sometimes.
Yeah, no problem.
All right, there we
There's
go.
a difference between coughing, dry cough, and choking for air.
Yeah, that's true. Markets are down here today about 2.5%. I mean, quite frankly, a 2.5% day in many, many market conditions would be very noteworthy. Right now, it's just an inside candle. No, I mean, this is the volatility we come to expect back and forth in this marketplace. There's a lot going on in terms of the news headlines themselves. One of the first things I like to do, though, is kind of just break down the chart if we can. And by the way, as you come into our show and as you're watching our show, as always, welcome. Type in the chat. Cody's going to be watching it. Give us a thumbs up as we go. If you're enjoying the content, make sure you subscribe and click the bell. Give me a chart analysis on that, Noah, if you can.
Well, you mentioned an inside candle, but I think it really wants to be a bearish engulfing. It's what it's trying to be. You got a nice little selling, you call it is inside technically. It's about the same size, but that's a little bit of selling pressure. I think overall, the one thing I notice here is just the distance between the tops of the candlesticks is shrinking, and you have technically a double top there. So those two candlesticks that hit the same high price point, that creates a double top. So if we change directions or change time frames down into an intraday chart, get down onto 30-minute chart, 1 hour chart here, you can see where we have, two tops in the same ballpark. Some of that overnight drift a little higher. Mm-hmm. But, overall, it's still in an uptrend on that hourly chart. So for all intents and purposes, we're still in an uptrend. Bulls have been in charge, but today is a little bit more what I expected, especially considering the fact that we're hitting that old support resistance. Let me get to one with, there we go. This old support resistance zone right here. It's coming in and it's testing that same price level. And so whether you're playing this bullish or bearish probably depends on how you're feeling about today's candle. Mm-hmm. But pretty good looking price zone there at 28.50.
28.50 obviously is the zone that we're up here at. I mean, I think that was one of those fib levels that you had drawn from before. When we measure the peak to trough in that backfill, that's about that 50% zone. Is that right?
50% is right here, about 2,800-ish. So it's overlapping, which will happen with things like Fibonacci's moving averages, where it'll test that zone. But it's a 50% retracement, and again, an old support resistance zone. So between those two support zones, you also have support resistance zones from back here in the past as well. Mm-hmm. So 28.50 is a significant price level, and you got that 50-period moving average bearing down on it. So S&P I think is still technically in big picture bear territory. Mm-hmm. Now, if you're not using the up 20% metric that some have looked to say that this is now a bull market, but from a retracement perspective, again about 50% retracement. And I think that's kind of kiss goodbye area. So I won't be surprised if we see the market. We talked a little bit this morning about maybe seeing it testing those previous lows down at the 2,200 again at some point. The economic data hasn't been that awesome, as we'll get into, obviously. Mm-hmm. But from a technical perspective, it looks to me like we're slowing down, and if it would have to take out those highs and probably cross that 50-period moving average.
How are you personally approaching this, Noah? I mean, for me personally, I've been sitting on some cash, waiting for some bearish positions. I actually bought some puts yesterday, just in full disclosure on that, just against the SPY themselves. Looking at the market and the conditions, I'm ready to start building a bearish position. But we all know me. I'm Timmy the Bear lately, Emily. It's always I'm just such a drag, right? Emily's known me for many, many years. I'm usually the pillar of positivity, obnoxiously so. But I just have a bear thesis. I'll get your take here a second, Emily. And Noah, how are you approaching this whole thing?
Well, I'm mostly in cash as well. I've got a couple positions I've been building some bullish positions in stocks that I think are value builds. Trying to cost average, get cost base down on some of those positions. And then I've got put debit spreads on the market, and I've even done a couple of put ratio back spreads that I've actually had to adjust since the market kept running up, and I'm going to have to unwrap those here and maybe rebuild them. But mostly I'm mostly in cash on the sideline. Just in the positions I do have on are not huge. They're I just kind of position size to risk tolerance, and I wasn't over worried about using stop losses on those because I just position size to pain threshold.
Mm-hmm. Emily, how are you approaching this whole thing? I know you're a cash flow trader historically. Coach Mark has very, very consistently been talking about naked puts at levels he's willing to take ownership. Boomerangs make a lot of sense right now. I know you've traded commodities as well. What's your approach to current market conditions? Have you gone down to day trading? Have you stayed with cash flow? How have you handled it?
It's been a mixed bag of things, just depending on the week and like what I'm feeling. I kind of stayed away from anything last week. I wasn't up to doing anything last week. And, we always say don't trade when you're emotional. So I really didn't do anything last week, but mostly in cash, legging into some, some stocks that I've wanted to hold on to for quite some time. In fact, Jake and I had a lengthy conversation this week because we all have that FOMO, right? The fear of missing out. And I'm like, okay, is this thing ever going to come back and retest, 2,200?
Mm-hmm.
Or is it going to start to go back up again? And we were talking about, okay, well, if we were going to go in, what would we, how would we start to, make that approach of getting into those stocks that we want to hold on to? So it's a matter of just, figuring out how much capital you have to deploy and not deploying it all at once. Maybe just leg into a couple of things that you want to have on to long term and just wait to see what happens. But overall, I still feel like we're going to test, the lows again. So I'm still bearish to some degree. So I'm just waiting to deploy my bearish positions. But for the most part, it's just buying some long-term stocks that I've wanted to own, just, legging in slowly but surely.
Short-term price action is going to dictate what I do as a day trader and swing trader. And I even do think swing trading is back. Noah, you think swing trading is coming back?
Well, based off what I'm seeing on the chart, swing trading has been effective. It's just for me, it's a question, Tim, of whether or not people want to carry overnight.
Mm-hmm.
And, I think the way the market has moved, this last little move has been up for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. That's typical swing territory.
Mm-hmm.
And, it's been a volatile run. So the ups and the downs and the size of the moves might be tough for the average swing trader to stomach, but I've seen a lot of charts putting in 5-10 day runs. So I would say, yeah, swing trading is possibly back.
And what's so funny about that? Like for when I was day trading, I was so ingrained in that 5 minute, half an hour, 1 hour chart. I was rarely looking at the daily candlestick. And then when I was looking for long-term investments, I was at the weekly and monthly, again, not looking at the dailies. And then I looked at it this week and I'm like, wait a minute, what's this? Like, this is not what I was used to seeing that, you can actually start to get into swing trading positions, but you certainly can now with these candlesticks.
Yeah. No, I think there are swing trading patterns coming back. We've had breakouts on the upside on some of the momentum plays. We were talking about it yesterday. In fact, we're going to go through a lot of charts here today, but there've been beautiful runs on the upside. And I do think some of these bearish retracements on the downside are developing as well. We'll get down to individual companies here in just a minute. Give me the XHB if you can. I want to talk about some of the economic data I saw coming out today. Emily, you were telling me in pre-production, one of the things that grabbed your attention was the home building industry, as well as I think mortgages, whatever it was. What was the data you saw that grabbed you?
So the HMI, which is the housing market index, is a number that comes out, I believe, once a month, like middle of the month. And I was just going through my daily routine and I was looking at FinViz, not FinViz, but Forex Factory, and I was looking at the calendar, and the number came out, and they were expecting the number to be like at 50. But the number actually dropped to 30, and 50 is like that number where, the market, how the home sales look favorable, and it did not. Obviously, it came down at 30. Just to kind of give you a perspective, in March and February and January of this year, it was in the 70s. It was at 72 in March, 74 in February, and today it came out at the 30 number. So that's just indicating that obviously home sales are not happening. New home construction has obviously dropped for the month of April. And I'm just, guessing that these numbers are going to just continue to, to not look great in the coming months. So it's just something to look out for.
You run in a lot of circles, including a real estate investor circle. You have a lot of, in fact, you have a background in real estate and all that kind of stuff. And you've worked with many people who we know personally as well. What's the tone in the real estate market right now? Are they optimistic? Are they hopeful? Are they afraid? What are you hearing from people?
Well, it's kind of like trading, the more skill sets you have in real estate, the better off you are, right? So if your approach has always been buy and hold, well, right now that might not be the best strategy for you. So it's, the investors that have skill sets of doing other types of real estate besides just buying and hold are finding opportunities, right? But for the most part, it's like, it's like everybody else. They're starting to see, tenants not paying their rent, and lending has gotten tight, right? So the banks are now, requiring more from home buyers. So the people that were in the pipeline that were, about to close or soon approaching that closing, now the criteria has changed and now they're not qualifying for those homes. So it's starting to affect, obviously the housing market. And I think we still have more downside on that to come as well.
Yeah, obviously home prices, and this the home builders here is one of the first things that came to mind, because the national home index coming down is going to affect home building, mortgages, those kind of things. It is affecting banks right now as well.
Yep.
I'm seeing that in finance, and we're going to take a look at some of the banks that actually did report earnings here in just a bit. Back on the charts for a minute here, if you will, Noah, and bring up the RTH, the retail holders, if you can. Another economic data point that I thought was just absolutely fascinating. And RTH, is this retail? Must be. Yeah, we're down about 1.65%. Retail sales were down 8.7% in March. One of the biggest 1 month drops in retail sales numbers that we've seen in a very long time. Now, obviously, it was up in food consumption and people going to Walmart and Target. So in the report that I read, there were some areas of optimism and hope. I think within that RTH, I wonder if Amazon is built into there too. That's why that chart looks so strong. Let me find you an ETF on that. But Noah, retailers are a big concern right now, don't you think?
Oh, for sure. And I actually saw some of the numbers come out. I was also looking at, again, Forex Factory, and they had, the numbers on those retail, core retail sales. Graphs are telling when you see a big dip in the graph, came out slightly better than the forecast, but there's definitely a big drop off, and that's going to really, I think, hit. You got your core retail sales, general retail sales. They came out about as forecasted. And again, it's interesting to see things drop that much that quickly, and that's pretty stark contrast between what we've been seeing. And it's not surprising. I mean, obviously, some areas are going to do well, but I think the vast majority of retail is they're. I think that it's going to take months and months and months for them to recover.
Oh, well, in fact, some of them may even be going bankrupt. In fact, give me J.C. Penney, one of the retailers.
Oh yeah, there's going to be retailers that use this as an opportunity to permanently close stores they've been needing to close for a while or thinking about closing. Because when you close them all down due to COVID, and it's like, okay, which ones are worth opening back up? And that's one of the reasons that, after this is all done, the job market's not going to be where it was. There are going to be stores that do not open their doors because they were hit so hard. Mm-hmm. And that's both small businesses and your larger businesses. If you think JCPenney is going to open up all of its stores down at 23 cents a share, market cap value is getting destroyed, they're not going to reopen every store. They're going to look at the major metropolitan areas, the major cities where they can actually get people still going to the stores, and any towns that are, have a JCPenney or a mall that are, less than 200,000 or so, they're probably just not even going to reopen those stores. And then all those employees at those locations aren't going to have a job.
JCPenney has been a flawed company for a long time. Their pricing models have not worked. The economic tricks they've been trying in the past have not worked. I remember when I was a kid, though, JCPenney was, I have like nostalgia with JCPenney. It was one of the first department stores I ever got to go do school shopping in, because it was one town over from the small town I grew up in, Emily. There was a JCPenney, and I would go and, get some clothes from them. But here's a retailer, obviously, that's not doing well. In fact, we're talking about preliminary bankruptcy here, Noah. Some retailers are doing fine. Online retailers, Walmart, those types, Amazon, obviously. Other retailers are doing terrible. I mean, just think of any random one. Dollar General, great. Yeah, you bet. In a recession, people are going to go to the dollar store. They're going to go to Walmart. They're not going to go to Nordstrom's, JWN. They're not going to go to the Gap. GPS. If you look at these charts, they're ugly.
JWM, a good sell the rip.
There are shortable opportunities in this area, is my belief. Do you guys agree with that?
Oh, absolutely.
Yeah. Retail sales pretty ugly here today. Let's talk about the banks. Give me XLF. Broadly based, have you guys had a chance to look at some of these earnings reports out of banks recently?
Not in detail. I've seen some of the preliminary numbers, but I haven't dug any deeper into the reports.
Well, I have, and I got to tell you, Mark and I were actually talking about it this morning and even yesterday. This is really, really concerning. Finance has been taking it on the chin the last 2 days. It's one of the things that's bringing the market down here this week. They're down 4%. I'm going to go through a couple of them here. We're going to talk about it. Bring up Bank of America. Everybody was assuming all this Fed money was going to give a backdrop to the banks. Bank of America had a 45% drop in profit in Q1. Okay. That's number one. They also had 3.6 billion in losses that they had to write off as well. Not good. Okay. Give me Goldman Sachs. Goldman Sachs's earnings, one of the biggest trading floors on the planet, obviously. Also, they do a lot of investment banking and different things. The chart does not look as bad as some of the others. Goldman Sachs missed their earnings by about 25%. They came in at 3.11. Trading profits actually held them up a little bit, but banking losses, also investment losses across other areas, they were expecting 3.75. Not good. I'm looking at companies like, and even give me PNC Financial. Okay. Look at all these charts. They're all very, very similar. We're seeing a gap down on a lot of these earnings. A lot of them are citing the same kind of considerations. If the banks can't make money with free Fed money, how can the market, Noah?
It's a great question. And I think we're just about to see the contagion of balance sheets hit the market because, we're still into this where people are, leases are not going to get paid. Mortgages are not going to get paid. Balance sheets are going to start to hit like dominoes. I think that's a big potential outcome there. So I think that puts the banks at a lot of risk.
Yeah, I agree with it 100%. In fact, if you're looking at the earnings season, it's always going to be financials and banks coming out first. There's been this presumption in markets here recently that somehow all the money, all the monetary policy, all these extra funding programs, they're going to give free money to the banks and this and that. Guys, you're also going to have defaults. JCPenney probably has leases on some of those properties, Cody, and probably has financial deals with many banks.
Oh, absolutely.
Retail stores, you name it. Tesla, even, who has been a strong company recently, they came out and said, we're not paying our rent at the same level we were paying it before COVID-19 because we don't have to, right? So banks are going to have pressure in different areas. It's going to be really fascinating to continue to watch bank earnings work themselves out. Guys, I'm concerned about that part of the market. There's no question about it. Let's move on and let's talk oil. Bring up crude light here. Noah, we could probably lead with crude oil every day. I have a basic belief. Crude oil is a better reflection of the economy than the stock market prices are. Now let's start with that question. Noah, do you agree with that?
Yes, but with a small caveat that the supply numbers or the production numbers, coupled with the drop off in consumption, are definitely leading to like where you've storage is at capacity. We've got a major inventory problem. So, inventory problem in and of itself, consumption dropping in and of itself, but combining the two, I think it's a perfect storm.
Yeah. What are you seeing in the chart here, Noah?
Low base makes me want to, if it breaks that 1920 low, that 19 low, that's a close below that to me would be pretty bearish. And I wouldn't be surprised if we saw it down at 15.
It's really interesting about oil right now. Obviously, we're talking about the supply demand equation and some of the things happening from an economics perspective. They're literally, I read a report out of the IEA, and you tell me, guys, they're saying they are going to push the capacity limits within a few weeks. The 10 million barrels per day, because Emily, you read the headline, OPEC Plus comes out and gets 10 million barrels a day. They're going to cut production. You would think oil would go up. but they are oversupplied by such an extreme level, and the demand shock around the world. People are not using oil products in the short term. The airlines are shut down. So much international commerce is shut down. It has been a reality check that oil is definitely under pressure now.
You know
No
what
doubt.
makes me so mad is that, you know, the gas prices have been high for however long they've been high. I haven't gassed up my car in probably a month.
Oh, I'm getting
And, you
like
know,
3 weeks, 4 weeks to the gallon.
right.
Yeah.
And I drove by a gas station a couple of maybe last week, and you know the gas prices have gone down, and it just makes you so mad. It's like, you know, when people, you know, when gas prices are low, people can't go anywhere, you know, but that it speaks to that people are not utilizing, you know, oil and gas. So yeah, it would make sense that oil is tanking the way it is.
You know, we're out here in the West. It's a driving culture. Actually, I think you can stay safe and socially distanced while you're in your car. Why not take a big road trip? You know, just get up over the mountain, Noah, and go see some sights and get out.
I think
out of
people
your
I've
house.
done it. I
Keep
drove to
that cabin fever
Colorado.
down.
I drove to Colorado the other day. I drove to Idaho the other day. You know, I've been out and about, and it is strange to see there's not as many people on the road. The trucks are still moving. You're still seeing a lot of trucking out there, but yeah, it's not a bad time. You know, assuming you don't get a big ticket for going someplace you're not supposed to.
For violating your stay-at-home order.
Yeah, something like that. Wear a mask.
Yeah.
Although I have seen people on the highway wearing masks in their car, and that doesn't make any sense. Driving by themselves wearing a mask in their car, and I'm just like, that's not how this works. That's not how any of this works.
Well, you're looking for the punchline, which is not a problem there. You almost found it.
I was thinking of it like somebody just farted in the car. It's kind of where I was going.
Maybe they went
probably crude.
Maybe they just don't want to touch their face, Cody. Maybe they went into the store and now they're going to have to take the mask off. They haven't been home to wash their hands yet. There might be a very explainable situation.
Oh, you're giving people the benefit.
Maybe I'm the guy who's had a mask on in his car, and I feel like you're making.
Tim's the guy that had the mask on in the car driving 25 miles an hour on a 75-mile speed limit. That's Tim. You know,
I'm concerned about oil, guys. I read a report, and I thought this was really fascinating. By the way, obviously, who are the biggest states that produce oil in the U.S.? Who are the first ones that come to mind? Texas, number one. Alaska is a big one.
Louisiana.
Yeah, Texas and Alaska are the first two that come to mind.
Oklahoma is a huge Texas state, right? In fact, or not Texas state, but an oil state. And there was talk here in Texas and Oklahoma here, and they're going to actually have some emergency meetings that they're talking about curbing production in the state. In fact, in Texas, they have a meeting on 4/21 here, Cody, where they might force producers to actually stop putting out more oil. There's huge fights going on right now. In fact, give me ExxonMobil. ExxonMobil does not like the idea, because there's a belief that ExxonMobil doesn't care if oil goes to $10 because all they're going to do is put people out of business. Okay, think about it. You've got competitors, you've got the small players, you've got the guys who are taking loans from Goldman Sachs and financing to keep these oil rigs open. Oil continuing under pressure will eventually drive out some of those competitors, force them into bankruptcy, and hurt them. Exxon will probably survive. They're the biggest oil giant in the world outside of the one in Saudi Arabia, right? Okay. Now, but then you cross that with PXD. Scott Sheffield is the CEO of PXD, and he actually had an amazing quote here this morning that I read, and I just wanted to share it with you. He says, if they don't drastically curb production in the state of Texas immediately, we're looking at $3 oil. $3. Noah?
I'm going to hold out for free oil.
It might be free. I mean, they might pay you to store it somewhere at some point if they don't fix the short-term problem. Back on crude oil. I'm a huge believer in the premise of owning a commodity long-term. But in the short term, this price chart, Noah, is still very aggressively bearish. Do you agree with that?
Oh, absolutely. I think we are going to see it. I do think it's going to break, and I won't be surprised when it hits 15.
My stopping point mentally is around 15 to 12. I think $3 oil. I think Scott Sheffield at PXD was trying to scare the commission into production cuts, quite frankly.
Well, yeah, that's effective, right?
Right. He's like, listen, guys, if we don't do something drastic right now, we're going to be looking at, in fact, he even compared his industry to the coal industry, where coal prices went down so far for so long, they had to close coal mines. Crude light, very, very concerning here in the short term. There's none of the economic data that's looking good from that perspective, in my opinion. I'll tell you a chart that is interesting, though. Give me natural gas if you can, Noah. Little momentum change down here. You know, nat gas has been a cash flow instrument for many traders for a long time. Guys, I mean, is this the kind of thing that you're looking at saying, okay, people are going to have to pay their gas bill, the power bill, all that kind of stuff? Emily, owning nat gas, UNG, something like that. Can I sign you up? Are you interested in that?
Not quite, but maybe.
Okay. Noah, what are you seeing in the chart?
I see a double bottom, a breakout, a deep pullback that's retesting that $1.50 or call it $1.60 zone. I'd need to see a higher low in here to really build confidence in that. Otherwise, I think it's still technically pretty solid downtrend.
Yeah. Slowing momentum is obviously not an uptrend yet. And so we don't have that confirmed. You got to like the pivot relationships if you're looking for something with stability down here. Obviously, commodities are going to come up and down. I'm starting to get interested in that UNG naked put thesis. You're looking for things to do in this market, right, guys? And I think there's so many things to do. There's day trading. I think swing trading is starting to come back a little bit where you can start to prep and get ready for some of those trades. And then that naked put boomerang type stuff is definitely on the table for me. I'm very interested in that gas down here at a low point for personally. I'm looking for naked puts at some point. I will be keeping an eye on that. Moving on through the commodity markets, give me gold next if you can. And Noah, just give me a thorough breakdown of this chart because we had a really interesting inverted head and shoulders pattern that broke out. Now we got a little red candle, but what are you seeing in the chart there?
Well, just that we had a nice little breakout. Again, the pattern here is you can call it inverted head and shoulders or just cup and handle if you just focus on the right, but it's a nice breakout. And then we reach out to a new high at 1788. I think any pullback into this neighborhood here, that's going to be a tempting buy zone back in anywhere back near 1700. Because it did break out, did post new highs, did so on a little bit of an uptick in volume. And again, I think the fundamental thesis for gold is probably as strong as it's ever been.
Yeah. Emily, one of our friends, Pearl Lee, who's a part of our Women in Trading group, she leads a group up there in Seattle. I had her on the podcast a couple of weeks ago. She basically said, gold's always had my back. I mean, what's your view of gold, Emily? It's got to be one of the things that you feel fine about, right?
Yeah, I'm with Pearl. Diamonds are not always are not the only thing that's a girl's best friends. We also like our gold, especially if they're holding the physical and trading the paper for cash flowing purposes. So absolutely.
Yeah, it's beautiful. Guys, you got to love the technicals. You have to love the fundamentals and even the storyline. All of this money creation, all of this devaluing of the dollar over the eventual amount of time, Noah, it paints for good pictures on gold. Would you even have a target here? Let's say you're long the ETF GLD, or even the futures market here, whatever product you're trading. Is there any target in mind, Noah, where you would actually trim your gold holdings and actually take profit?
Trim, no. Technical target, yes. I think 1923.70 seems like a reasonable target from that weekly chart. And I think 2000 is not that far out of the question for just profit target. Mm-hmm. But as far as I don't mind holding it, again, I've got physical. I have a little bit on the paper. I've been mostly doing kind of like what Mark said the other day. Feeling dumb for selling puts because you wish those naked puts were long calls.
Sure.
Yep.
Gold's up almost 20% year to date, by the way. There are areas of the market. There's always a bull market somewhere, guys. I mean, there's no question about it. It has been really strong in gold here recently. Dollar index real quick here. We just keep bouncing around this 100 mark. Cody, you're my Forex kid. You do the Forex report over at Tackle Trading on the weekends. What are you seeing in currencies right now?
Uncertainty. It's still in that wedge type pattern that you're seeing. The economy, the world economy wants to see, after all of these banks and printing and stimulus packages and things that are being put in by not just the US, but multiple countries in the world, they want to see where that ends up, how that affects, what are the tertiary, the secondary, tertiary, quaternary effects of these stimulus packages on the overall economy or value of these currencies. There's speculation as to what the currency should do, but then we also saw that as so when the U.S. first started talking about their stimulus package, the U.S. dollar came down. Other countries started talking about theirs, U.S. dollar goes up. Why is that? And that was because that they were seeing the U.S. economy and the strength of the U.S. dollar recovering quicker after this is said and done. Now, will we be the fastest recovering? I put my money on it. But as far as the value of the currency, as we continue to print and the Fed just keeps putting more money in,
But let's stop on that. I don't think it's a bad debate, but there are concerns about the U.S. economy. I mean, we haven't had our own manufacturing for a long time. We still have, we have not contained this COVID-19 outbreak, quite frankly. We have massive surge in New York City. Other parts of the country have been unaffected. Let's not assume that just because we're patriotic. I mean, we have to still.
Oh, no. I am assuming it because, I mean, we do have a major power. We are a large producer of things. And overall, as the economy grows, I do think that the U.S. economy is going to recover quicker. And it's not just patriotism or cognitive bias. When you look at the number of companies and innovations and things that come out of the United States, if those supply chains open back up, which is one of the first things that I think will go back to capacity, then I can see the U.S. economy strengthening quicker. Right now, as trade is down due to all the restrictions between different countries, once those restrictions do get removed and just trade routes start back up, what's to stop the U.S. economy then from being able to put supply back into the market? Now, the demand side is where the question is. Is there going to be a demand for certain items? No. I mean, retail stores, we were talking about that earlier. You're not going to see a demand for certain products. But overall, as we do start coming out of this and people do start going back to work and we do have testing, like right now, we were talking in pre-production, the United States has done more tests than any other country in the world. So yes, our numbers are high, but that's also because we've tested more people. We tested over 3.1 million people. That's a good thing. As we get more reliable data, then it'll get to a point where we could reopen quicker. So, and I know there's the ongoing debate of like, you know, when should we open? How much should we open? So I don't want to go into that necessarily, but when the economy does start opening, it's not going to be one stark day, economy's open. It's going to be a slow process over months, not even weeks, but months until it finally gets back up there. But I do think that because we are leading the world in testing and we're learning more and we have a better understanding of, you know, where these pockets are, then we should be able to reopen a little quicker. So for those reasons why I do think the U.S. economy is going to be the one that recovers quickest. So in that time frame, I am bullish on the dollar, but right now it's neutral.
Quicker is not the same as quickly. Spencer makes a really good point in the chat. And if we sustain more than 20% unemployment,
yes, and that's true. I'm not saying we're going to recover quickly.
Period of time.
Quicker, which is why the U.S. dollar, as most, you look at the U.S. dollar compared to any currency, they're all like wedge patterns.
Nobody knows how to value the paper anymore because who knows? I mean, no, it's just made up. It's not backed by anything. And they're going to expand the balance sheet of the Fed at extreme levels we've never seen. They're printing more money than we can even wrap our head around. And they keep talking about printing more down the road. Are you bullish on the dollar just because it's the best of a bad bunch, or do you avoid?
That's no, exactly it just makes me want to go back to the gold chart.
That's right. That's exactly right. I don't think the market knows how to value this. Where's the carry at right now? Give me the dollar yen cross pair.
There is
there's probably no carry, right?
Yeah, there's next to no carry at all. I mean, the only reason there's a carry against the dollar and the yen is because the yen has negative interest rates.
Yeah.
But the US dollar, like my favorite carry trade for the past 3 years was the euro dollar cross pair because we had a high interest rate and they had no interest rate. Yeah. But now we're both at zero, so it's irritating that I can't sit there and watch that carry trade just put money into my account. But what can you do?
Yeah. Cody gets irritated like an old man way too easily, Emily. I mean, he just gets bothered.
Wait till that boy starts crawling. He's going to get so irritated.
No. I'm with you, Cody. I think day trading in the Forex market's always in play in almost any market condition. You can find a cross pair that you want to play. I'm seeing some interesting cross pairs across the board. That dollar yen cross pair, though, if that broke down, I'd be very.
That thing's been basing for so long, though. Yeah, no, not the euro. You're looking at euro yen.
Mark and Matt aren't here, so we can take a quick peek at Bitcoin so they don't just jump on top of me. Ugly chart. Move past this chart. I don't want to defend it at all. That is a bear retracement.
We're all anxiously waiting.
No, I got nothing.
It's so funny. We have Timmy the Bear, except on Bitcoin, and then he's like, "No, I don't want to be a bear."
No,
I don't want to be there.
well, because I have a problem with fiat currency. I think that alternative currencies still are a path forward. A debate for a podcast when I can get my brothers on there to take some punches at me. So it's a fair fight, no doubt about it. Individual companies I want to take a look at. Let's run through several of them here today. Tesla, I'll tell you the market's down today, but one company that has just taken off recently has been Tesla. They had a report out, actually. Goldman Sachs upgraded them to a buy from a hold. And they had a report out of China that many of their factories are reopening. They're getting back up and running and whatnot. So Tesla's a very interesting company. That chart, man, talk about a very, very difficult day-by-day chart. There's almost a gap every day. Noah, what are you reading in that chart?
Well, good gap up. It's range up from a short-term technical perspective, as far as like what I would expect out of a really big swing out of Tesla. It's a big swing, moving from 400 up to 730 at the moment. It's a pretty good size pop. And those last two candles, I think, are showing me a little bit of a slowdown. That's a pretty deep retracement as far as like that whole tip to trough drop. You're back up probably 61% in that ballpark. You're back up above all the moving averages. So what I would look for here is, this is one of those things where I missed the pop. I feel like I missed it. I don't really feel the urge to chase it. But if it were to pull back down to that 50-period moving average, or maybe to that rising 9-period moving average, I think I'd be interested in the pullback.
But why is Tesla up to begin with?
Because Teslas are cool still. And
I mean, even if their factories open in China, who's buying a Tesla in 6 months?
They're making the best battery-powered ventilators that money can't buy.
In the face of earnings, in a debt-driven company that has rarely posted a profit, that still has extreme debt on the books, where they're going to have to sell to a consumer base who's unemployed $100,000 car, I have no idea why it's up. It makes no sense to me, Emily. So
I know it's a great looking chart, but why? I feel like a 2-year-old, but why, Tim? But why?
It does not grab my attention in the slightest bit. I mean, I know it's a breakout. The chart, I mean, if you're just trading what you see, obviously there was a nice little break there and a run. I'm not going to chase FOMO plays like this, though. I mean, that's just not where I'm at here in a market with too much uncertainty. But again, I'm Timmy the Bear, like Mark has given me the moniker, no question about it. Another company grabbed my attention here today. So here's where, Cody, you can call me an old fuddy-duddy, Procter & Gamble. They raised their dividend today, and I like stuff like that. PG, if you can here, Noah. Not exactly a screamer, not exactly something that you're going to get too crazy about, but they did raise their dividend 6%. We saw this out of Johnson & Johnson yesterday. There's an age-old lesson that every new investor on the planet can learn in this market condition. It's called sector rotation. Okay. And when PG is popping the dividend, because we all use Procter & Gamble products, it's a reminder that stability and safe companies. Emily, whether or not I buy a Tesla or not, I'm still going to be hunting for that toilet paper, right? I'm still needing that shampoo and conditioner and the soap and all those things.
I got to go to the store for that today. So this I can understand.
Paper, I just had to jump in there real quick. Toilet paper is my segue to key in there. When you put it on the roller, does it piss you off when somebody puts it, when you have to spin it up or spin it down? Because this is becoming an issue in our house here.
Only the heathens do it on the bottom. It must roll over the top.
Yeah, you got it, right? You got to be able to hit it down. You don't flip it up. You hit it down. Okay. Toilet paper is a precious item nowadays, guys. Let's respect it.
I have a mischievous little dachshund puppy who, if you have any amount of toilet paper hanging down, he's pulling that whole roll. He's taking it across 4 rooms in my house and it is gone. So
that calls for a whooping right there.
Yeah, for sure. For sure. Gina, what's your read on all these conservative companies actually popping their dividend up right now?
Tim, I'm glad you said that, because I'm currently putting together a new ETF called Stay at Home ETF. It's going to be companies that we need if we all stay home. Because there's companies that are coming out of the woodwork, and it's a glimpse at our future, Tim, that we're going to have to adapt to things like this. Is this your first pandemic, Tim?
It's my first pandemic, my first quarantine
Cody?
as well.
Cody is Cody's first. And here's the thing is it's amazing that there are diamonds in the rough, like these companies, Procter & Gamble, things that you need, not once, but things that you need. I'm looking at our list of very liquid stocks, that are not only great for swing trading, but day trading also, that have a lot of range every day, but they're things we're going to need. Healthcare, like I said, Procter & Gamble, the chip companies, NVIDIA, and Netflix, Zoom, right? Zoom, like we're using now. It's amazing how important these companies are to not only things we need, but things that are essential for businesses to keep going forward. So what businesses are thriving from this environment is really amazing. But it's really, really a trader's market. You got to be careful. An investor's market, not yet.
By the way, Coach Gino is going to be holding a special webinar here on YouTube channel tonight at 7 o'clock on the butterfly strategy, which Gino, you've been using for a long time as a specialty technique, as a cheap way to play these directional moves. Is that right?
Yeah, I'll tell you. So, like I
they're
said,
beautiful.
Yeah, Cody was.
I've been killing them the past couple weeks.
Yeah, I remember, Cody, when you were like, "What's a cheap way to trade?" Cheap meaning low risk, and that's the problem. The biggest mistake option traders. A lot of people get excited about options. And they think, you know what, market's expensive. Options are expensive right now. They're terribly expensive. Their normal price of options. Some of them are 10, 20, 30% of the price of the stock, and they're only a month out, which means options are too expensive to trade. So this takes it to the next level of option trading, which is spread trading. And one of your more advanced strategies that you have to commit to learning if you want to use it is a butterfly or debit condor, which involves many different legs on the same product. So what we do, Tim, is we take an expensive option and we make it cheaper by hedging it. And it's a very popular hedge trading strategy. I like it for not just this environment, Tim, but for all environments. What you need is big moves. We're getting that. And you need to go in there with low risk. And that's what a bee fly does, a butterfly or debit condor. And for example, Cody, what's one of the cheapest butterflies you've done on an expensive stock?
I'm on mute. I did some 10-cent butterflies on Apple.
Oh my God. I knew you were going to say that. Apple. Everybody loves to trade Apple because it's pennies.
I've already closed out of what was it, a quarter of them. So I did 10 of them at 10 cents, $100 risk, and I actually sold them right at where it's at right now at 285. So I got the fill on that. It popped up. I've sold a quarter of them to make it a zero risk trade.
Oh, so as soon as you can pay for the ones that are out there, you're out.
Yeah. Well, once I can make it zero risk, I'm going to do it. I'm going to control the risk first and then worry about profit second.
So that's a great little thing right there, what you just said. So just doing one is 10 cents per share, but it's, you have to do 100 shares. So $10 plus commissions. How can you go into a market this volatile and pick a very volatile and expensive stock like Apple and trade it for 10 cents a share? That's why we use butterflies. And that's why that's awesome, isn't it? Now, did you pick bullish or bearish? Just out of curiosity.
I went bullish on it. It was down about 2 weeks ago was when I put it on. Sold right up at where it is. It was 285 by 282.50 and 287.50. So just a narrower butterfly. Normally I like to go $5 out on either side, but I was able to get it for $5 at the narrower spread.
So you go out of the money. That's what you're supposed to do. Now check this out. The psychology behind it, Tim, is what really motivates me is this. You know how many people are watching CNBC, watching us right now? We have hundreds of people watching us right now because psychologically they want to know what to do because they're scared. Deep down, the root of that scare, that fear is what? Risk. Now, if you take the time that you're studying all these professional talking heads about bullish, bearish, airplanes, getting used to this environment, vaccine, you're not going to be able to make a decision because they can't. But if you tell me I can trade Apple for $10 risk for the next week or two, and I can pick bullish or bearish for $10, I'm not going to think too hard. I'm not going to get stressed out. I'm not going to have FOMO. And you know what? What's your max reward on that, Cody?
If it were to close at this level, which I think it closes in like a week, it's something like $2,000 or more.
So what you're saying is I should really show up tonight for Gino's butterfly extravaganza.
Exactly. Yeah.
Gino, what time is that at again?
What time are we doing it, Tim?
It's going to be 4 o'clock your time. You're a West Coast kid, surfer dude out there in
7
Redondo
Eastern.
Beach. 7 Eastern. Yep.
That's the main thing. And what is that Zulu time? I think it's like, I don't know, midnight Zulu. No,
I have no idea
actually,
what that is,
it's
Emily.
actually
What is he talking about? Interpret, Gino. Emily's here to interpret. What did he just say?
For those of you that you can't see it, Emily's
listen.
just shaking her head. She was just shaking her head.
Oh, all right, punt. Oh, my. So
Moving on.
tonight, and by the way, if you're out there, Team Tackle, somebody type this in the chat for me out there if you can. 7 o'clock Eastern time, butterfly webinar. 7 o'clock Eastern time, butterfly webinar.
bring a stock. Bring a stock you want to trade.
And Gino's going to show you one of his favorite techniques and whatnot. I think it'll be a fun one. I'm looking forward to it as well. Gino, I got to get your take on a couple things.
Sure.
One thing you said a minute ago was it's really interesting to watch these companies that are going to be critical for the economy moving forward and making money. We assumed that was going to be the banks. We're 2 days into bank earnings here. They've been bad. What's your read on the bank earnings so far?
Well, that's what scares me from previous market drops. Is we saw this in the beginning when we started getting the first scare from China, is energy stocks and bank stocks were the worst performers, and small caps. And I'm seeing the exact same thing today.
Yeah, give me XLE. Energy stocks have been terrible. In fact, you've got companies talking about bankruptcy, oil's under pressure.
Oh, man. I mean, think about ExxonMobil. They literally have possibly 250,000 employees they might lay off. 250,000 employees. That, I mean, one of the biggest companies in the world, of course, but those are international. That is a lot of people. And they're not minimum wage people either.
No, these are not jobs that can be easily replaced in the short term.
Right.
And we talked about it earlier before you popped in here, Gino. I know you're doing some of the stuff this morning. Were you on lounge today, by the way?
No, that was Noah.
Noah this morning. Okay, gotcha.
No, I wasn't there this morning. That was somebody else.
Somebody was there. Tyler was there. All right, XLF though. And now obviously the bank earnings have been terrible to start this week. I'm concerned. Well, I've got a bearish thesis anyway. I mean, I still believe we're going to retest lows, but I know the bulls have been in charge recently. Don't the banks have to make money for the bullish argument to make any sense?
Yes. Banks make up a majority of the S&P, or the banks, the financials, and energy. And when you go in there and look at their estimated earnings going forward, because that's where investors look at, is the forward earnings. 1 year, 2 years, the big money, 3 to 5 years out. And I'm already seeing companies like in the energy and financials starting to predict negative earnings. Now, what does that mean? That means they have no profit per share. So they're going to have to stay afloat with whatever reserves they have. But guess what they do to start saving money and expenses? They look at their biggest expenses on their employee front, and it's easiest is to cut their employees, especially when nobody's going to the banks, nobody's going to mortgage, and you're not going to go to somebody's house because they're working out of their house to do a loan, And even my bank, man, they don't even let you in. You have to do everything through ATM. But that's the easiest cut, is right away lay people off, especially when the government's saying we'll pay you to lay people off. Next one is dividends. That's what investors that, live off dividends, they go, wait a minute, you're cutting my cash flow. They look for something better. And sometimes that's bonds or some other kind of cash flow instrument, gold, whatever. So when they start cutting dividends, so the next shoe to drop, Tim, big companies layoffs. That I don't want to see that in financials and energy, but
well, we're already starting to see some of that chatter, aren't we? I mean,
that's what's going to make this next. I'm just saying possible 10% drop here in the short term, and then you're going to see dividend cuts, and you're going to start seeing I'm already seeing in the ExxonMobil is already predicting negative earnings. So when you go from $5 a share to estimated down to $1 to estimated negative, all in a month's time, that means your outlook is not good. Outlook not good means uncertainty. Investors do not like that. Now, when I say investors, I'm not talking about traders. I'm talking about people with big money that want to pile in. So like I said in the beginning, great traders market, horrible investors market, so live with the FOMO as long as you can.
Well, usually investors are the thorough ones that actually point to data and are really well researched. Right now, Gino, I'm hearing some of the most irrational investor arguments I've ever heard in my life.
Me too.
About painting out 2022 and 2023 recovery and earnings.
How do they know that?
We don't know a thing. They're making it up as they go, Gino, and we all know it because they just don't want the stock market to go down.
I heard something stupid. I'm not going to say his name because he's a famous financial planner, radio host. He's on CNBC. I'm not going to say his name because heck, we might interview him someday. And sometimes he's got great stuff to say. But they're like, well, he's a fundamental investor.
Does it rhyme with Bim Framer?
No, Bim Framer actually picked the last little bottom. He did pretty good finally.
Yeah.
But
anyway,
it's not a solid bottom, but it's another guy who actually has courses out there in financial planning, and he's up there with Susie Orman. He's very good. But here's the thing. He's like, oh, you can still do fundamental analysis. Just look out 2 or 3 years, like you said, and just do an average PE, do an average growth. What?
Makes no sense. It literally makes no sense.
Okay, so go out and guesstimate on an estimate. Let's go guesstimate on an estimate that's being lowered every day.
Well, I mean, here's the thing, and you always got to follow the money. In fact, in the chat right now, I want everybody to type in "follow the money." You follow the money, you'll learn a lot about life. So many of these guys, they're talking their books, Gino, because they're long equity.
That's it.
That's what it is. They're talking their books because they own equity. They run funds. They run hedge funds. They represent the media, which is dependent on the public making money to the upside. And so they always want to paint that side of it. Of course, it is amazing to me, when you start looking at it and you're like, okay, guys, really? Bill Ackman, you're going to come out and tell me that you're bullish on this market just because you're long $100 billion in equity? Come on. We see right through it. Don't tell me to price current market prices at 2023 earnings with a straight face. At least laugh it off with me. Let's have some fun and make fun of it. We don't know what the future holds, Emily. That's part of the fun of this whole game, I guess. Anyway,
people will say anything to make you feel calm. There's a big airline guy on the thing today saying, we're doing everything we can to keep passengers comfortable. We're spacing them out, having a seat between them. And so in other words, we're not letting people sit in the middle row. Listen, if that's closer than 6 feet, right? And you got me in a capsule where you're circulating the air. Oh yeah, that sounds real comfortable. And I'm like, they're trying to make it sound like the airlines are safe to fly. No. I don't know anybody, my close friends, that are looking forward to going on an airplane right now.
No.
You've been on many of them.
I'm not getting on an airplane until I have clarity personally. I mean,
Emily will get up there with the scuba gear, right? You got to put the mask.
That'd be funny, actually. That'd be pretty funny. A bunch of companies I want to flash through here, guys. And by the way, I mean, there's a lot to be positive about, but not today. It's Timmy the Bear Day. There's no doubt. I'm winning the day here, Noah. There's no question. Peloton, look at some of the bulls in the market right now. You tell me, these are the top price volume stocks today. Peloton taking off. You guys, anybody here own a Peloton?
The longer I stay on house arrest, the more I want to buy a Peloton.
Get it on your watch list, guys. I don't think you chase the price here, but obviously demand for at-home products. You can't go back to the gym, get a Peloton. Obviously, a lot of people have been doing that. Zoom Technologies, guys, we nailed this pullback. We've talked about it. When it was selling a couple weeks ago, Halftime Crew, we were talking about this pullback back into these averages for a while. I loved it. I love the momentum. Man, we're on Zoom right now. Noah, is there a new entry even up above the highs if we break out?
Well, last night in the coaches show, we talked about momentum trading. I think you could even take a trade above today's candle high and trail a stop and target that 164 resistance zone. And if it breaks above that 164, 165 resistance zone, that's another buy signal. So, absolutely. And I don't normally like to chase the dragon. We definitely called this one. We nailed it. We've had it on that watch list, and we've talked about it here in the halftime report. Good momentum. I think there's a little bit more room to the upside, but if it breaks that ceiling, that's a good clear signal. You can keep chasing it.
Mm-hmm.
Can I just give a shout out to Gino on this, because I believe it was either last week or the week before. I had to be the week before because I didn't do any trading last week, but we talked about Zoom on the lounge, and we actually did a trade on some shares. And I told you guys I wasn't doing any trading last week. And here's a really good tip from us coaches and mentors here. If you're going to take a break from trading, make sure that you cancel all your sitting orders before you stop trading. So I actually had a sitting order on this and I didn't cancel it, and it triggered yesterday or the day before. So, just a little note that, if you show up to the lounges and show up to everything that we have here at Tackle, you're not going to miss these great runs that we actually have out here.
And was that to buy, Emily?
It was
go
to
lo-
buy.
To go long.
So I got.
So
I
you
got triggered.
accidentally made
I
money?
accidentally made money.
Yeah.
Darn, I hate
Dang,
it
that's
when I do that.
awesome.
Hey, I'll tell you though, I mean, pop back above the moving averages there after that little cluster.
Right.
That's just technical analysis 101 right there, guys. I love that chart. Great job, Gino, by the way, alerting everybody out there.
Oof, got lucky.
Netflix. Netflix is still booming.
Netflix.
Even on a day where the markets are down, it is running, it is running, it is running.
Now that is not just a recovery bounce. That is a bullish breakout right there.
Yeah,
That's a new high is what that is, Gino.
dude,
Yeah,
all-time high.
I mean, look at that move just in the last week. Are you looking at a daily chart? Just
Yeah.
look at this week. And this is, what are we, 2 days deep in this, 3 days? Look at this breakout. If you don't move your stop loss up to protect your break even and take a little bit off the table, there's no reason to lose on this breakout. But what a beautiful breakout for this week.
So if you were long equity right here, Gino, as a trade, not investment, you'd be scaling off a little bit.
I would bring my stop loss way above my break even, which is that breakout point because we use the weekly breakout point of 394. I mean, you're up $40 a share. And if you're on an option, you've doubled your money. If you double your money, take one off, like Cody said, and pay for the rest. But lock it in, put a stop loss in there, and you could always put a trigger above this high to get back in if it does it again tomorrow. It's a
My
day-
bull puts definitely wish they were long calls.
Take a peek at Roku here.
Oh.
And I am so tired of cash flow traders who are making money whining about not making more. Do not trigger me.
Hey,
at the
greed
end of
is
the show.
real.
All
Greed
right?
is real.
I mean, you made money on your bull puts. I mean,
Yeah, but it could have been so much more.
cry me a river, Noah.
Okay, now Noah could give us a breakdown on this candle pattern here. No, what did you learn?
I see a little bullish engulfing action there.
Little Steve Nyson.
Little gap up, little bullish engulfing off of the 50 period moving average. I think that's a decent little signal. You could momentum trade that probably up to the 120 target ballpark. When that
I'm not trading it yet.
average.
I'm just watch listing it, but I'm very interested in this company making a comeback.
Well, maybe you could put some bull puts on, then it'll run up for sure.
And I promise if I make money on them, I won't whine about it.
I'll tell you what, I love my Roku TV, man. I hope they do great because
Very popular product. I mean, who doesn't love Roku's? I mean, if you've ever used one, and especially you're at home, you're using all the streaming services, it makes sense to me right now, in my opinion. Other winners here today, look at Activision.
Ooh, yeah.
Big shout out to Coach Mark out there. I mean, he's been talking about Activision for a year now, it seems like, but even recently about one of the winners. There's a breakout right there, guys. I know we got earnings season coming up here in about 2-3 weeks, but guys, I mean, that actually probably is tradable in that perspective. Love the breakout here. It's a little choppy stock. I mean, it's not a smooth candle performer, Noah. What are you seeing in that chart?
Well, I like the breakout. If it can maintain this close above the resistance, that's that signal a lot of breakout traders like to look for is a close above resistance. You gotta like that. That's a nice pop. There's definitely clear air to the upside. I think you got an easy target of 70 ballpark, 69.70 before you hit the support resistance zone. And gamer's gonna game. This looks like a pretty solid breakout.
I gotta agree because I try to avoid gaming. I try to avoid it big time because it's like an addiction. I've spent so much of my life in front of wasting hours playing video games till 3 a.m. But now I got a daughter who's real good at Call of Duty, and that's an Activision company. And I'll tell you what, when you see a 12-year-old or 13-year-old just whip your bottom in a game where you're like, wait a minute, I should be better than this person. And then you see what these kids are getting paid to play these games. And this coincides with a company called Twitch that's really making leaps and bounds, which is streaming. It's like YouTube.
Streaming. They do gaming streamings, right?
Yeah, and it's
like what we're doing here on.
It's got a following bigger than the Super Bowl. It's huge, and it's worldwide. And I'll tell you, man, it's a big industry out there. And Activision's doing a great job promoting free downloads of their games like Call of Duty. And I've never seen the rooms this full. Tim, just real quick, I don't want to bore you on it, but what it is you can actually jump into a game, and with other people that are playing online, everybody's got their own handle. These rooms are 100 people per room. They fill up in less than a minute. Every minute
I believe
the room
it
starts.
Yeah.
But
I believe it.
thousands of people are doing this. It's not just the kids. Thousands of people are doing this.
It's really interesting. Huge demand for gaming, obviously, because people
Huge.
still want connection. You can still get online. You know, I talk about this all the time. I'm a huge gamer. I love games. You know, I'm unapologetically a gamer. And, you know, there was many years of my life I actually did not play a lot of video games. I picked up video games recently.
Same here. I had
a lot. Yeah, it's fun. I mean, it's a way for you to connect and actually do something that isn't about just
And Tim,
reading
can I transcend
scientific data.
Can I transcend on that? When you said you spent many hours in front of the computer, I think that's why I like to trade. Is we like controlling what we see on the screen and playing that game. So there's a lot of kids that if they're really good, or teenagers or gamers out there, you're going to find a real neat correlation between that and trading. Yep. You're going to see the charts. You're going to see, and that's why I stopped gaming, is because I started to trade, and I wanted to spend more hours on trading. And if you could break away from the game to be at tonight's show where I show you how to do a butterfly, you're going to be addicted. You will be addicted to butterflies. But real quick disclaimer, butterflies and option trading in general, but especially butterflies, are cheap so you can participate in the trades. They're not cheap so you can go out and do a whole bunch of them. The whole idea is just to participate with, you know, what I mean by that, diversifying a bunch of little positions and not put a lot of money out there. Biggest mistake I see people doing, going, oh, I can do that for 15 cents, 15 bucks. Wow, I can do 100 contracts. No. Do 2 or 3, call it a day, and go to a different stock. Yeah. So that's the biggest number one mistake is people. When I hear people saying, oh, I lost my shirt doing butterflies. How did you, at $10, $15 a trade, how did you lose your shirt?
Went all in, pushed all my chips on the table. It was easy, Gino, watch.
Over position sizing, money management. These are the number one mistakes people make in all trading and investing, by the way. They over leverage their accounts. You got to learn to money manage if you're going to play this game, because there's so many great ways to play it. Day trading, butterflies, all these things we're talking about with you guys 100%. Doesn't mean you just go out and do 1,000 contracts, Gino, because they're 10 cents, right? You still have to think about the relative cost against your account size, all that kind of stuff.
Real quick joke. I was giving somebody a tour of my house, and this has happened more than once. And was it MTV Cribs? No, it was one of those. But anyway, I was touring my house, and they came in my little offset office here, and they saw my monitors. I have 6 monitors set up, and they weren't sure what I was doing. They go, are you a gamer? And I go, no, actually, I'm a trader. They go, oh, okay. And then they saw my daughter's room, and she's got a couple monitors set up too, because, you know, she mines crypto and play. And they go, is she a trader too? And I go, no, she's the gamer. And they're like, okay, now this is just wrong. You guys got. And then they saw my wife's screen set up, and they go, what does she do? And I go, she does both. She's the gamer and the trader. And
you know, the worst thing you can ever do when you're telling a joke is say, all right, here's a joke, because it put us all on like, okay, I want to listen to this. And we all got
it's actually a true story.
Real fast, Noah, you know, we're like, and Gino makes us laugh every day. So I didn't hear the joke there, Gino. I just got to tell you, Noah, I didn't see a chuckle.
I'm waiting for the punchline still.
Gino, you're my punching bag today. I usually make fun of Noah's jokes. He's my dad joke guy. There's no doubt. A couple more bears I want to talk about. Look at OXY. Gino, you're talking about the energy sector. Ugly chart. Pressure.
Is this the one that Warren Buffett was big on? I can't remember. I think this was it.
I don't know. It might have been you might be thinking about a different company. I can't remember that. But
well, with a 79-cent dividend at the moment, I can't imagine they don't cut
they're
that.
not gonna hold that dividend.
Oh, come on, Tim. Where's your faith?
They're not gonna hold that dividend. ConocoPhillips. Take a look at this one. COP. These are the big losers here today. I mean, how about a butterfly at 20, Gino? Because you can do put butterflies and call butterflies, right?
Oh, now, this is why that rang a bell when you said Oxy. It was 2 hours ago. Buffett's taking more Oxy stock.
Oh, he is. He's buying it down. Well, there you go. Buffett buys them cheap, right? Yeah.
Yeah.
Definitely.
Yeah. Well, you know, he's mostly never wrong, right? I'm treading lightly on. That's not a good butterfly stock, Tim. You know why? Too cheap. You want a big mover.
What about COP? I mean, COP at 30. I think you got the potential to go all the way to 20. You could probably build a butterfly down there pretty cheap, I'm guessing.
Yeah.
Right?
And even with earnings coming up, I'll do butterflies right after earnings because the
Mhm.
drop in volatility helps it.
Mhm.
Helps it.
Give me a look at Halliburton.
Oh boy.
Poor Hal. I mean, they've been laying off people and obviously a lot of pressure. Just same thing, energy sector. And my last one here, General Electric.
Oh,
An old favorite here, Emily. I haven't got to make fun of General Electric for a long
You
time.
just
but look
had
at
to today, didn't you?
back at $6. Poor GE. I mean, they were trying to make a turnaround there for a long time. I was giving them credit. They were starting to move in the right direction, but the pressure of this economy, not good. I mean, a company like GE, who's still got debt problems, still got governance problems, they're going to have to lay off people, I'm sure, if they've not done a bunch of that already. Real pressure down here on the bottom. You've got a lot of back and forth in the markets here, guys. Final thoughts from everybody out there. Noah, what's on your mind? What are you going to be paying attention to the rest of the week?
Well, I am still looking for some of the value investing ideas. Seeing if, trying to figure out who's going to still be able to pay dividends, because I think there is an opportunity at some point in time to build in bigger positions there. But then I'm looking for a bearish drop. I'm watching the market. I still think we got legs down because, the economic and fundamental reality doesn't necessarily match the current price action, and something's got to give at some point in time, unless the Fed's, printing press can win. And we'll see if that's true, but it's a good time for short-term trading for the most part.
Mm-hmm. Emily, what are you paying attention to the rest of the week? What do you got going on? I know you got a women in trading webinar on Friday. We'll be promoting that throughout the week, reminding people, but what else you got going on?
Yeah, kind of like everybody else. I'm looking at earnings. I'm looking at what I want to, start to pick up long term. But for the most part, I'm just chilling out with my kids. We're about to go to the store, so that should be interesting. We're required to wear masks now, so that should be a fun, interesting ride out today. But other than that, I'm excited for Friday night. We've got women in trading. We are, just gonna chop it up and talk about trading and what's been going on. It's for us ladies. As much as we like to dress up and doll up and look pretty, we haven't been able to do that. So I'm hoping I can get the ladies to dress up and look cute and come and join me on Friday night.
Mm-hmm. I love
They're in makeup and a wig.
I don't even try to sneak in anymore. No, I mean, listen, I leave you guys to whatever it is you guys do. What is the agenda for a women in trading webinar?
It's always to have fun.
Yeah.
That's always number one. We're going to have fun. We're going to talk about how,
do you guys make fun of us while we're not there?
All the time. All the time. The first conversation is who tried to sneak in, right? So that's always the first. But yeah, we make fun of you guys all the time. But we also appreciate you guys because you guys are our coaches and our mentors, and a lot of us, learned how to trade through you guys. So we still give you a little bit of love, but it's still a no-go for coming in.
Many of the best traders in our community are women. There's no question about it. Now, I know who you are out there, by the way, and I appreciate all the work that all of our community puts in. Special event that we do about once a month, Emily, Friday night, 8:00, I believe, right? Eastern.
8:30
Eastern. We'll keep talking about that through the week. Cody, what you got going on the rest of the week, kid? What's on your mind?
When it comes to trading, just I'm waiting for some type of direction. I'm antsy to be able to rebalance my portfolio. Right now it's sitting majority cash, which is, where it needs to be in this kind of market. But majority cash isn't really the balanced portfolio I like to have. So I'm ready to just see some clarity. Not going to happen this week. So I'm going to day trade the Forex market. I'm going to day trade the stock market. And I'm going to sell some butterflies.
Gino, I have a confession to make. I didn't listen to the joke, so it might have been the funniest joke in the history of the planet, but I zoned out when you were telling it. I apologize, my friend. I apologize. Gino, you're a rock star, man. I always appreciate you coming in here, sharing your insight. One of the best traders you guys will ever meet. He's going to be hosting our webinar tonight. Gino, what's on your mind, though? Last thought from you, my friend.
What's on my mind? Ooh, that's not going to be. We're censoring this.
Yeah. Wrong question.
What's on my mind is this, Tim. There's a lot of pent up energy out there, which causes frustration in people that are knocked off their daily routine and pent up in their houses, and it comes out in all forms of greed, fear, anger, over drama. But here's the thing: you don't want to hit the market with that. You don't want to hit that. So have fun with the market. Make a game out of it. Pull your gamers away from their computers. And let me show you how to do butterflies, whether you want to sell them or buy them. They're dirt cheap, low risk trades. And you can go out and get rid of the FOMO and have something to look forward to every morning called trading, where you have low risk, high reward. And for some of you out there, you might not want to go back to work after you figured this out. You're going to say, you know what? Actually, this is working from home. This is a happy time. So the only downside, Tim, is there's so many candidates out there to trade, so many opportunities that there's too many to pick from. So we're going to limit ourselves to 5 or 6 a week, and we're going to stick to that. We're going to practice them. We're going to do that tonight. Again, just log in, Tackle Trading, and that will be 4 o'clock Pacific, 7 o'clock Eastern, 11 o'clock PM Zulu Greenwich time. Okay.
Greenwich. I do like that. That made me laugh.
Zulu time's military time, Tim.
All right, guys, that's our show for today. If you're watching our channel for the first time, as always, subscribe, click the bell, come back and join us. We actually have a webinar tonight. And if you're one of our Team Tackle members, as always, we love you. We really appreciate you. I don't even say that lightly. We do. We love our community. And, we'd love to have you come and join us tonight for the webinar, 7 o'clock Eastern. We're going to have also a bunch of other content. Noah, you're going to be in the lounge tomorrow.
Yeah.
Great idea from Hero earlier in the chat. Why not do some butterflies to follow up from what you guys were going to be talking about tonight, right?
Sounds like a good plan to me.
Yeah, sounds like a good plan to me too as well. And if you are not yet a pro member of our community, as always, there's a 15-day trial in the comments and in the description of this video below. Come and join us over at Tackle Trading. Great job today, guys. As always, Emily, you are the star of every show. Appreciate you. And glad to see that you're feeling better, And by the way, one of my favorite books, trading, last thought here, Emily, from me. I actually think you did the right thing. When you're not in a good mental or physical place, you don't need to trade that week the same way. Now, your investments, right? Your long-term plays, your position trades, your cash flow, that's all different. But reminiscences of a stock operator, what was one of the best lessons, Cody? Sometimes it's okay to go fishing.
Yep.
There are times for fishing. And when you're not there, there's nothing wrong with that. Glad to have you back.
No, I thought you were going to reference trading in the zone, because that's what is it, Mark Douglas? He talks all the time that, when you're not in that right mindset, then you're going to get greedy. You're going to break your rules. You're going to over position size. You're going to start gambling and stop trading.
Exactly.
And when you start gambling and not trading, the market will pay you like a gambler.
Yep.
Exactly.
And I just can't shut up. Last thought, but bears are not in control yet. Let's not overthink one inside red candle. With more data, we can adjust our thinking. But in terms of the trend, Noah, that still is a short-term uptrend, right?
Yep, that's right. Timmy, the part-time bear.
Part-time bear.
Timmy, the
I'm always
part-time bear.
waffling. I'm like this bear that can't decide what side of the fence I want to be on. We'll come back tomorrow. We'll update everybody. We're out, guys. Good job today.